public document completed. But as Brad said, that'll then become a public document and the district will post it on its website when it's completed. But so what I'd like to do tonight is, if you remember back to a year ago, similar presentation, I'm going to go through some of the required items that I must go over with you annually as the board, and then some financial highlights touching on that fund level, what you're used to seeing, general fund, food service fund, and then a little bit of highlights as far as that full accrual, that GASB 34 full accrual level. So I'm going to skip to page 3 of the presentation and go over our responsibilities as the auditor, and they are for performing the audit in accordance with generally accepted auditing standards, forming and expressing an opinion about whether the financial statements which are prepared by management are materially correct, fairly stated, fairly presented, and conform with U.S. generally accepted accounting principles, which is the accrual basis of accounting. And then we're required to communicate significant matters to you, which I'm doing tonight. I always like to point out that an audit provides reasonable, not absolute assurance that the financial statements are free from material misstatement. What that means is during the 17-18 fiscal year, myself or a member of my audit team was not watching everything that happened, and then when we actually perform the audit, we don't test 100% of the transactions that occurred during the year. So we give what's called reasonable assurance, not absolute assurance, that those financial statements are free from material misstatement. On page 4, the responsibilities of the district are preparing and fairly presenting the financial statements, designing, implementing, evaluating, and maintaining effective internal controls over all aspects of the district's financial reporting, providing us during the audit with unrestricted access to any documentation we may need to review, any people we may need to make inquiries of, if there would be any fraud, illegal acts, material weaknesses, or significant deficiencies, making us aware of those. We were not made aware of any. Subsequent events, so this audit is through June 30, 2018. We're going to be signing off on the audit in the next 2 weeks here, but that time period from July 1, 18 through when we sign off on the audit is what's called the subsequent event period. Anything significant would happen, a new debt or building a new building, significant projects, new big grants, anything like that that could impact the reader of the statements. We would have to consider whether or not to disclose those items. Or even potentially accrue for those, and we're not aware of any at this point in time that we would be disclosing in these statements. And then essentially a lot of the stuff that I have in here tonight, Brad and Tom as the management will sign off on. That includes most of this information, essentially saying they agree to everything and they've taken ownership of the financial statements. Page 5, the audit scope, how we kind of operate our audit. We are not required to test internal controls, but we are required to understand the internal controls. It'd be really hard for me to perform an effective audit if I didn't know how the bills were paid, how they're approved, who's reviewing them, who's signing checks, how receipts are coming in, who's reconciling bank statements. So all of that's kind of how we start our audit, is we say what's changed, who's changed in that process, and then we identify different risk areas, and that's how we come up with our audit procedures. And as I said, we don't test 100% of everything, so we'll do different calculations that provide us with thresholds that maybe we'll test 100% over a threshold and then do a sample of the population under that threshold. And that essentially helps us to identify, what areas we need to test, where we do testing. And the one key I always like to point out is every year we're required to do different testing. So we have to always include, we like to call it an element of unpredictability. So we can't test the same level of transactions, the same accounts each year. We need to kind of change it up just to make sure that we're catching different areas each year. As part of the audit, there's usually audit adjustments or journal entries that we propose. I didn't include a list of those today just because we're not quite complete, although as Brad indicated, we're not really expecting any significant changes at this point. But once we get everything completed, this document here tonight will be finalized and it will include any of those proposed adjusting journal entries, so you'll have those. Page 6, our expected audit results. We're expecting to express an unmodified opinion or a clean opinion on the district's financial statements. Again, expecting to just because we haven't signed off on yet, but that's 2 thumbs up. That's the best clean, the best opinion you can get, a clean opinion. As far as the federal grants audit, or what we call a single audit, compliance audit, we tested the National School Lunch Program this year. Each year, depending on the level of grants, we usually have to test anywhere from 1 to 3 federal grants. This year was just the National School Lunch Program, and we're not aware of any findings. There was no non-compliance that we ran into. So we're expecting to also express an unmodified opinion or a clean opinion in regards to the single audit or the federal grants audit. The next couple of pages I'm going to go through pretty quickly. Page 7, we've complied with all ethics requirements. We are independent of the district. There really weren't any new significant accounting policies or the way the district records their transactions this year. There is one exception to that, and that was a GASB pronouncement that came out. There's that acronym that Brad threw out at you, Governmental Accounting Standards Board, and I'm going to get to that in a little bit, so I'll circle back to that. Page 8, estimates are always a part of putting together the financial statements. As the auditor, we're required to assess what estimates are made by management, document the rationale, look at the reasonableness, how have those estimates compared to actual results, how have they changed, and really the significant estimates that affect the district statements are useful lives of assets for calculating depreciation, any allowance for uncollectible taxes, and then different calculations for future liabilities related to the district's pension or other post-employment and benefits liabilities. Page 9 just talks about if there were any difficulties encountered or disagreements. There weren't any during the audit. Also points to financial statement disclosures. I've taken that piece out of here tonight just because you don't have the full financial statements, but again, that will indicate those footnotes in the full financial statements that are of a more sensitive nature that we like to kind of point to for your reading when you get the full financial statements. And page 10 is really the standard language that says everything I'm required to include tonight, I've included in this presentation. Page 11, internal controls. As I indicated, we're not required to test internal controls. There is one little asterisk to that. When we test federal grants, we do have to test the internal controls related specifically to that federal grant. And as I said, we didn't run into any issues in our testing of that grant. If we are aware of any deficiencies throughout the audit, if anything would come up that we would consider a material weakness or a significant deficiency, those are the two highest levels of what's called a deficiency in internal control. We're required to make you aware of those. I can't stand here and say that there aren't any, but I can stand here and say that we were not made aware of any, or we're not aware of any material weaknesses or significant deficiencies in internal control, and that's consistent with prior years. So then page 12, we're going to get into what I think is the fun stuff, the numbers. So if you actually flip, and I apologize, you have to turn your presentation a little bit. These are actual pages that we've taken out of the financial statements to go over with you. So the first two pages are all general fund, and it's budget versus actual. So on the left-hand column is the district's original budget. This aligns with the PDE 2028 that you submitted to the state when you finalized your budget for 17-18. The second column is then the district's final budget. So this is throughout the year when you make budget transfers or movement throughout the budget. That's going to be the district's final budget numbers. The third column is the actual, so what actually happened in 17-18 as far as the revenues and the expenses that came in for the general fund, and then that last column is the variance, so taking your final budget versus your actual and looking at whether it was a positive or negative variance. If you look at the top section, it's your revenues broken out in local, state, and federal, and you can see total revenues of about $61.2 million for the general fund. And that was about 1.2 or 1.3 million over budget, so a positive variance with the budget. Going down to the bottom of the page then is your expenses. You have 59.6 million of expenses in the general fund, and that was about 2.7 or 2.8 under budget, and with expenses, again, another positive variances. So your expenses came in about 2.8 under budget on the general fund. And so if you flip to the second page, we kind of see where that results when we take into consideration other financing sources and uses as far as transfers out of the general fund to the capital projects fund. You actually, for the year end, June 30, 2018, the net result was a decrease in the general fund of about $300,000. If you look in that first and second column, you actually had budgeted for a decrease of about 4.7 million. So it was a positive variance of about 4.4 million. So only a decrease of about 300,000, or a use of the general fund's fund balance of about 300,000 for the 17-18 year. Any questions on that before I move forward? I know I'm throwing a lot of numbers at you.
So in a $62 million operating budget, to be 2.7 million under budget on the expense side actually is pretty good conservative accounting, am I right?
Yeah, I think what you want to look at is your overall variance. So you budgeted a $4.7 million use of fund balance. You actually came in at only about a $300,000 use of fund balance, which is, a positive variance. I think that's probably pretty consistent with where the districts ended up in past years. So it kind of just depends on how you want to look at it as far as individual line items, your revenues, expenses, and things come up. We all know we don't have a crystal ball to come up with exact numbers, so it's all in, how that budget's taken a look at, what that method is as far as, looking forward to the future.
Thank you.
So I'm gonna flip to the next page, and at the top of this page, it says balance sheet governmental funds. And these are your three governmental funds. On the left-hand side is your general fund. Second column is your capital projects fund. Third column is the debt service fund, which really doesn't have a lot of activity. And then your fourth column is the total of those funds. So as you can see, the top half here are your assets of your governmental funds. You've got total assets of about 38 million. 32 million of that in the general fund, and then about 6 million of that in the capital projects fund. And you can see there where it's broken out. You've got your cash and cash equivalents, you've got investments, interest receivable, taxes receivable. Now, as Brad stated, on the general fund, this is what we call modified accrual. Exactly how you budget. You've got normal things like accounts payable, you've got receivables on here. You just don't have those full accrual items like debt, pension liability, fixed assets. The one item to point out here is your taxes receivable on your general fund is going to include any taxes that are collected within 60 days after year end. If they're outstanding and not collected within those 60 days, we then defer them and take them out of the revenue, and then they'll be recognized when they're actually received. And that's across all school districts, that 60-day rule is used specifically for real estate taxes, and then often with other taxes as well. You have due from other governments, due from other funds. Those are going to be transactions between the different funds. And then some other receivables, inventories, prepaid expenses. And then that last item is the amount that you have with the Lincoln Benefit Trust. So that is a restricted asset that's shown on your balance sheet. The bottom half then is your liabilities. You've got your accounts payable, due to other funds, due to other governments, accrued salaries and benefits, those items that weren't paid but were related to the 17-18 year, they were paid afterwards. Other payroll withholdings and current liabilities. So total liabilities of about 7.3 million. That next line item, the deferred inflows of resources, or what sometimes we like to call deferred revenue, we just can't use that terminology formally anymore, and that's going to be related to any of those taxes that were not collected within 60 days. So that's where we defer them until they're actually collected. And then the last piece is fund balance. So your fund balance is actually your assets minus your liabilities. It's not all cash. Because you've got other things, receivables, et cetera, that are up in there. But the fund balances are broken out into different categories. You've got non-spendable, meaning we cannot use it to pay the bills, and that's because it's in inventories or prepaid expenses. You then have restricted. Restricted means it's restricted from an outside source. So you can see under the general fund, that Lincoln Benefit Trust is restricted. Those funds are in the Lincoln Benefit Trust, cannot be used for other purposes. You then have committed. Committed funds are those that you as the school board have acted on to essentially earmark or commit those funds for a certain purpose. You've got capital improvements of about 1.7 million that have been committed. You've got about 4.7 million that's been committed for future PSERs and retirement expenses. And then we've got a new one there this year that we essentially proposed to the district and recommended showing it differently this year. And this is where you actually look at what was budgeted for the 18-19 year. And if we would look at that budget that was submitted, it was about a $4 million deficit as far as expenses exceeding revenues. Now, the reason why that number is not that $4 million is because part of that is up in that PSERS number, but the net portion then, that 3.34 million that's being shown as committed, essentially we're saying because the board acted and approved a budget that had an excess of expenses over revenues, we're committing part of this year's fund balance for next year's budget. And so that's why we pulled that out into that committed line item. So that is a different presentation from prior years. It's something that we've started to see amongst all of our school districts and a lot of governmental entities that they're kind of pulling it out, essentially showing that they've committed those funds for the next year's budget. And then what's left is unassigned. So essentially it can be used for anything. The one thing to point out with committed is because it's board acted, essentially those funds, depending on how the 18-19 budget what the actual results are. That'll just change each year then based on what, what deficit there might be in the following year. Any questions there? The next page that says Statement of Revenues, Expenses, and Changes in Fund Balance, again, is for those governmental funds. General fund on the left-hand column, and then your other funds that I spoke about earlier to the right. You've got your revenues broken out at the top, local, state, and federal sources. Again, circling back to the actual we looked at on the budget versus actual page of 61.2 million. And then you've got your expenses broken down by function, totaling 59.6 million. So looking at regular revenues and expenses, you had an excess of revenues of 1.6 million on the general fund, but then we'll take into consideration what we call other financing sources and uses. Your biggest item here was about a $2 million transfer from the general fund to the capital projects fund. And so you'll see that if you look between the first column on the left and the second column, that transfer going out of the general fund into the capital projects fund. And that circles down to the net change in fund balance of a decrease of about $300,000 for the year for the general fund. In the right-hand column, you see for all governmental funds, it was an increase of about $850,000. So that takes the total fund balance for governmental funds from about 28.6 million to 29.5 million for the year. I'll keep moving to the next page. This one at the top says Statement of Net Position, Proprietary Funds, and this is your food service fund. So again, you've got your assets at the top of this page. The one thing to point out with the food service fund is this does operate on the full accrual basis. So here you have fixed assets recorded on this page. You've got any liabilities like net pension liability, your other post-employment benefits liability. So this fund operates a little bit differently than the general fund. It's on the full accrual basis. Total assets of about 1.9 million at the top. You then have non-current assets, fixed assets, so that's your machinery and equipment, net of accumulated depreciation. And then there's also some Lincoln Benefit Trust reserves that are on the food service fund as well. You can see they're about 87,000. And then there's deferred outflows of resources. This is one where we could kind of call them prepaid expenses, but again, it's not the formal term. Most of this item is going to be related to changes in the pension for the food service fund and changes in the other post-employment benefits plan for the food service fund. So each year an actuarial evaluation is completed, and based on the calculations that go into completing, that liability assumptions, people in the plan, interest rates, actual earnings on funds towards those plans, we have changes each year that affect the liability, and then we essentially defer some costs into the next year or have prepayments that are related to the next year. So total assets of the fund are about 3.4 million. And the bottom half of the page is going to be your liabilities. Total current liabilities are about 117,000. Non-current liabilities, here's the pension fund piece on the food service of about 2 million. Compensated absences of about 60,000, and then other post-employment benefits of about 113,000. Total liabilities of about 2.3 million. You've got some deferred inflows. Again, that all goes into that calculation of your pension liability items that essentially have been received or paid that are deferred until the next period. And then what happens is instead of fund balance, we have what's called net position. So assets minus your liabilities is your net position, and we pull out the piece that's related to fixed assets because we can't pay the bills with your equipment. So you've got about 983,000. That's going to equal that amount up top. That's all related to equipment of the food service fund. You then have the board designated piece for the Lincoln Benefit Trust because again that's restricted, and then your unrestricted piece of the food service fund is about 50,000. The last page that I have then as far as fund level is the revenues and expenses for the food service fund. So at the top you can see operating revenues of about 600,000, operating expenses of about 1.6 million right there in the middle. So when we think about the food service fund on an operational standpoint, you have an operating loss of about $1 million when we think of the food service fund as a business. But then you get other revenues related to kind of this business of the food service fund. So under that non-operating revenues and expenses, you do have earnings on your investments, You'll have donated commodities, that's federal food, that's donated to the district of about $133,000, and then you get state and federal reimbursements for the meals provided to the students. So once you take into consideration all of those non-operational items, you actually have you have about 1.2 million of additional revenues that are added to that fund. And then we had a prior period adjustment this year for 2 items. The first item is, I talked about under new accounting policies, the GASB 75 other post-employment benefits pronouncement that came into play this year. What that did is, a couple years ago, if we think back to when the pension went on the financial statements of the district, the full liability, it's kind of the same thing for the other post-employment benefits. So all those health benefits that are given to the retirees. And now the full liability of that plan is going on the financial statements of the district. So the full liability of the pension is on the district statements. Now the full liability of that other post-employment benefits piece is on the statements. What you're looking at right here, though, is just the food service portion of both of those liabilities. So in order to put that into play this year, essentially we calculate what the balance at the beginning of the year would have been, and that's called a prior period adjustment. So we want to make sure we capture what would have been at the beginning of the year, and we do that as a prior period adjustment. There was also a little bit of an adjustment to the prior period related to accumulated depreciation, and that was in comparison to the district's calculations with what industrial appraisal had, and we'll get to that on the next slide a little bit more.
Kristen, just for the benefit of new board members particularly, we talk about the pension, we hear that a lot. What's going on here is that there is a shortfall in the funding of PSERS across the Commonwealth. And we've been paying higher and higher rates to try to reduce that shortfall. But these GASB requirements now say that we own a portion of the state's shortfall. So there's an actuarial calculation coming out of Commonwealth that says of the state shortfall toward the pension plan, Gettysburg Area School District owns so much of that debt. The general fund portion shows up in that second set of books, that GASB records, but in the food service fund, we have to put it right in the accounts. When we talk about pension, a lot of what we're talking about in this context is our share of the state's obligation to fully fund the future debt of that pension plan.
That is really unfair.
But legally, it is your liability, so.
Wow.
And this was a big shock. I think it was probably about 4 years ago when we called it GASB 68, when this whole pension thing came out, where we put that, again, it's on those GASB 34 statements, those full accrual statements, but when we put the full pension amount on the district's financial statements. And what we do, I will point out, just because we're having this conversation, we do disclose in the footnotes that you do get a reimbursement from the state towards retirement expense. It's usually between 50-60% of the expense. However, it's not, although I'm not saying it's going away, it's not they're not legally bound to continue giving that, that reimbursement. And so that's why the full liability goes on your books. It's not like we take the liability and say, oh, well, we get reimbursed for 50% of it from the state, so let's net it. That full liability goes on the books because there's really no contractual item there that would say that you will always get that 50% from the state. Not saying you wouldn't, though.
The district expends the money first, and then the reimbursement happens
Correct.
later in the school year.
Yes.
But if I'm not mistaken, Brad, we calculated to a degree when we did the budget, taking in anticipation that we were going to be liable for any shortfall that the state couldn't come up with, correct?
Not in our general fund budget. In our general fund budget, what we're accounting for is our share through our contributions for that increased cost. So what we're showing is basically half of that pension liability in our books. We're obligated to pay a certain amount. Well, the Commonwealth is obligated to pay in as well. And that is not in our general fund budget. It shows up in these GASB statements and in the food service fund statement. So there's an amount above and beyond what we account for in our budgets, and that's the state's piece as well.
And I think what's important to point out is when we're talking about this pension liability, which on the next page I have your full liability on there. When we're talking about this big number, remember that is taking into consideration everybody who's covered under Gettysburg's pension plan, and then we're taking it over the life of expectancy. Essentially, how long each of those people will be in the plan, time value of money, assumptions based on how long they're going to live, costs, etc. So you've got this one big number that's really the plan and all those people over many, many, many years. But it's kind of that worst case scenario if the world ended, this is the total liability of the district at June 30, 2018, based on those assumptions and calculations.
And it's not calculated only on those folks who have retired. It also includes a calculation for that expense of future retirees. Because those of us who are working now, there's still that shortfall. So at some point down the road when we retire, there's part of the calculation that there'll be a benefit owed out there. So when you look at these numbers, it includes basically all the employees and all the retirees in that calculation.
I understand, I guess, and I can ask a question later. I'm trying to see the correlation to the budget proposal that we adopted and how that changes or affects anything. Because I'm going to tell you common sense, I'm not waiting on Harrisburg to make that decision. They made the decision to put us where we're at.
Now, Harrisburg already has made the decision, the retirement system has already made the decision on what our obligation to the pension plan next year will be. And it's similar, it's a little bit higher than this year, the rate, but it's fairly similar. So that's already been established, and it's always known well beforehand what rate we're going to have to pay in.
So for example, for the 16-17 school year, the district paid round numbers, it was essentially 30% of salaries towards PSERS. For 17-18, again, round numbers, it's like 32% or 32.5%. So that's what Brad's indicating is PSERS essentially says, this is what the expense will be general fund wise. And so that's what you're budgeting. You're essentially taking a look at what your salaries will be for the next year and then what that known PSERS increase is, because those are the expenses you're paying that year. That's what's required. Essentially, it's, again, you're paying it quarterly into PSERS based on the salaries that occur during, the 3 months beforehand.
It's not your problem, that's outrageous. It's actually unacceptable. It's on the backs of everybody, and it's ridiculous. And that really is not your,
Oh, I understand.
that's not directed towards
The
you.
year we
But
implemented this, I heard lots about it.
That's absolutely absurd.
But in addition to that, Brad, if I heard you correctly, in addition, Gettysburg Area School District, like all the other 500 school districts in Pennsylvania, we've paid our obligation. And now are you saying that in addition to that, that Harrisburg, who has underfunded it for years, we're going to have to take on part of their obligation? Is that what I'm hearing you say?
Well, let me step back and make a correction. We have paid everything they have asked and told us to pay.
Right.
They have not asked and told us to pay what they should have. That's the problem. When life was good and investments were doing very well, instead of saying there's going to be a rainy day and we need to keep funding this plan, they started giving away more benefit and adding health care and those things. And that's where the problem was. In 1 year, in fact, the only thing we were asked to pay, and the only thing actually we could pay into the program, was simply an amount to cover for the health insurance benefit that they had. There was nothing paid in by school districts across the Commonwealth toward the pension itself, because they were saying they don't need to. So what we have is, and gets back to exactly what Kenny was saying, unacceptable. The unacceptable piece is that they saved their budget because they didn't want to pay in what was owed, and in doing that, they reduced our budgets. And years ago, it goes clear back into the 80s, not enough was paid into the plan.
Right.
Which is another time, it's a budget discussion as we go into the next calendar year, because I don't trust.
So Brent, our share of the state's pension shortfall, does that relate only to our employees? Or did I hear you say that we share in the shortfall for employees across the state?
It's both, but it's our portion of those. They know the retirees that are Gettysburg retirees versus every other district's retirees. So the amount that they apportion to us is really quite accurate.
And that has always been Gettysburg Area School District's plan. There's always been a liability related to it. And that was one of the goals a couple years ago when they, GASB essentially came out and said, we really need to get this liability on the books because it's not being reported. And it's kind of thought of as, in our case, it's Harrisburg's problem being here in Pennsylvania. We're not the only state. But that was the thought process of this liability really is of these school districts and should be shown on their full accrual statements. Because up until, I forget what it was, I think it was 4 years ago, that liability was not shown on the face of those GASB 34 full accrual statements.
Right, over a period of years too, I think, this district, like many districts, saw the increases in contributions coming down the road, which is why fund balance was assigned to future payments, because, there are districts that didn't do that. And when those percentages went from, about 16% to about 32% in just a matter of just a couple of years.
Yeah, they're starting to plateau now, but there were big increases.
Right, we're staying in the low 30s for a while, but there were times where we were at 16, where districts like this one started to pre-fund those large payments coming down the road, which has kept this district in a better situation than districts that didn't set that money aside for those increases, so.
I agree with you, and that's why I said this is significant when it comes to the time of the budget, because you and I both know that we can't control what we're gonna pay in on any given year, and we can't control replacing a roof on a high school and having to go to the capital fund for that, correct? We can't control that, so what we can control is what we're gonna raise the taxes to the citizens out there. It's like shooting pheasants in the dark here.
And I'm not suggesting this, but what a lot of districts have done is that they've outsourced just about everything, from food services to maintenance and facilities, and it just absolutely kills the morale of the district and so on, because they need to get employees off of that pension system. And just look at a lot of the local districts, and I'm happy to say that I'm hoping that we don't have to go down that road.
For one thing, in light of that, the pension plan starting next year is changing for new employees. So we'll talk about that during the budget process, that the cost for them, from their standpoint and from our standpoint, is quite different. But it'll be only for those new employees who've not been part of the system, which will become more and more of a factor as time goes on. But there have been changes. It's just going to take a while for those changes to make a big difference.
So I'm going to have you flip to the very last page. And this is really just highlights of those full accrual financial statements. So these are kind of the known factors, the big ones that I wanted to point out. We've talked about one of them a little bit here. But first bullet point is fixed assets. So again, on your GASB 34 statements, we go full accrual. So now we capitalize all of those assets of the district. And you've got about $84 million worth of buildings, land, equipment, et cetera, that the district owns. I did speak to this a little bit. There is a prior period adjustment that we are recording this year, and that was related to the accumulated depreciation when comparing the district's calculations with the outsourced industrial appraisal calculations. That's a company that the district uses to essentially come in, take a look at the assets on hand and calculate depreciation. And the adjustments were all related to prior years, so we don't want to skew the current year numbers, so we do a prior period adjustment for that. That second bullet point, that pension liability, so that $83 million is Gettysburg Area School District's portion of the pension liability. Now that bullet point underneath it shows that it actually decreased $631,000 from the year before. Again, this is going to change every year based on interest earnings, assumptions, everything that kind of goes into coming up with this liability. So when you look at a $631,000 change on $83 million, it's not really that big of a change, but it can go up and down depending on the year. Debt of the school district, again, this goes on your full accrual financial statements, about $39 million of debt. That increased from the prior year of about $3.8 million, strictly based on principal payments that were made during the year. and then your current portion of that debt, or the amount of your principal payments that will be made in the 18-19 years, about 3.8 million as well. Compensated absences, again, another liability that goes on those full accrual financial statements, not on your general fund. These are payouts for anyone who would retire based on, what bargaining contract that they're on as far as vacation, sick, etc. So that's about 1.7 million. That increased about 81 or 82,000 from the year before. And then the last piece, kind of like the pension, is the other post-employment benefits plan liability. That is 5.5 million. That increased about 4 million, and again, that's because this year that new GASB 75 went into play, which essentially calculated the full liability of that plan for the district. So in the past, we showed what was called a net liability. This is the full liability of that plan. Same rationale and reasoning behind GASB 68 with the PSERS, and that pension is essentially make the district aware, really get that into the readers of the financial statements as far as what that full liability looks like for the district. I threw a lot of numbers at you and a lot of information. Any other questions?
Just clarifications, if I may.
Sure.
Besides that sticker shock of that liability piece with the pensions, I think I heard you say on page 6 that you're expected to express an unmodified opinion, which is clean, means 2 thumbs up, best opinion.
Yep.
Also that the major federal awards programs, you're expected to express an unmodified opinion, so same
Yep.
category as before. Lifting, I think it was maybe 9, I marked them.
Was it not aware of any material weaknesses or
Yep,
significant
no
deficiencies?
significant difficulties, again, a
Oh, yeah.
positive way of reporting on that. I think that's the last opinion piece that's given there. I'm right, there may be one on page 11, I'm not sure. You did not identify any deficiencies in internal control, but you're not liable to report on the internal control. But again, another positive.
Exactly. I can't stand here and say there aren't any material weaknesses or significant deficiencies, but I'm not aware of any material weaknesses or significant deficiencies. That auditor terminology.
So besides the sticker shock, seeing very positive opinions given up to this point, it's not complete yet, on the accounting practices here at Gettysburg School District.
Correct.
Thank you to the business office and Mr. Hunt and Mr. Portman and all others in the office for the good work that you do.
Thank you.
Thank you.
Thank you.
And I always have to give a shout out to Brad and Tom and their staff. So it's in our job description to bug people as the auditor. So we always need a lot of information, especially when you're auditing an entity this size. So thank you to them for helping us along the way. And we'll be getting this done soon because, as you can see, I've got a baby on the way. So I was hoping if I have too many difficult questions, that would put me into labor. So I have 2.5 weeks, and that's why I brought backup with me, just in case. So.
Thank you.
But I just have to thank everyone at the school district for the continued relationship. So if anything would come up, Brad and Tom obviously know how to get a hold of me. And then again, once everything's finalized, you'll get those, those packets, the updated kind of highlights. And if there'd be any questions from there, you can just reach out to us.
When do you expect to wrap up?
Soon. Hopefully this week, but it has to be by the end of the month. So per state requirements. So we've got Brad and Tom working hard. Thank you.
Thank you.
Thank you. Brad, I have just one question, refresh my mind on the debt that we owe. When is our major debt paid off?
2027, I believe.
And something like, I knew it was around there, okay. That's borrowing that we have no other major debts coming. Is there anything else? Okay. We'll move on to our business. First item of business, number 9, personnel. Item 9.12 and including item 9.5.
So moved.
Is there any discussion? All right, hearing none, we'll take the vote. Ken?
Yes.
Al?
Yes.
Kathleen?
Yes.
Carrie?
Yes.
And I vote yes. Next item is supplementals, item 14.1.
So moved.
Second.
Discussion. Okay, Al,
Yes.
Kathleen,
Yes.
Carrie,
Yes?
Ken,
Yes.
and I vote yes. Tam, does that, are all supplementals filled now for the year, or do we still have some?
They are not,
open?
we still have a few to fill.
We're still, it's a work in progress, as you
That's
said.
correct.
Okay, just double checking. 15, transportation, item 15.1 and item 15.2.
So moved.
Second.
Discussion? All right, hearing none. Al,
Yes.
Kathleen,
Yes.
Carrie,
Yes?
Ken,
Yes.
and I vote yes. We now move to 17, business and finance. Item 17.1. The floor will entertain a motion to nominate a board treasurer to fill the vacancy that's going to be created by Bill's resignation. And it will be in effect until June 30th, I believe, of 2019. Am I correct on that? Yes. Okay.
Mr. President?
Entertaining a motion.
I would like to nominate Kenny Hassinger as the board treasurer.
Second.
Okay. Anybody make any comments? Ken, are you willing to take on that position? You accept that position?
I didn't make
All right.
a comment.
Well then, all right, so,
Thank
all
you,
right,
someone else, no?
okay. So,
Just wish he was a little more passionate about the pension situation.
just a little bit. All right, well, we have to make this official. Kathleen,
Yes.
Carrie,
Yes.
Ken,
Yes.
you're allowed to vote for yourself. Al,
Yes.
and I vote yes. And I know that Tom's gonna be hunting you down probably after the meeting, because they're gonna need their signature cards and other things that'll need to be done, so that you're official, okay? Thank you. Also under business, item 17.2, 2, and including item 17.4.
So moved.
Second?
Discussion. All right, hearing none. Carrie,
Yes?
Ken,
Yes.
Al, Kathleen,
Yes.
and I vote yes. 18, financial report, item 18.1, which is pay the bills.
So moved?
Second.
Any discussion? Okay, Ken,
Yes.
Al,
Yes.
Kathleen,
Yes.
Carrie,
Yes?
and I vote yes. Information items, just remind everyone that the 2 board vacancies, applications will be accepted in the business office until January 3rd. On January 7th, we will hold public interviews and make a selection of those 2 candidates to fill those 2 positions at our regular board meeting, or prior to the regular board meeting on January 7th next year. Any other things for the good of the order from any board members?
I just have a quick question, and I didn't bring it up during the vote, because it wouldn't have made a difference on the vote. A while back, we had a citizen come in, I believe it was a mother of 3, who proposed or discussed with, or asked us about the damage to the laptops and whether or not the district was going to, looking to purchase any type of protective case or cover. And I just want to see if that was ever followed up with.
I met with the person afterwards.
Okay.
And we look at it administratively every spring for that following fall as we roll things out. We look at different school districts, what they're doing, what their success rate has been. So we'll, follow that.
Yeah, and I'm not I know, I remember her coming in and she was passionate, and having 2 kids in the district, you're paying, that's extra money going out. Kind of feel for them to a degree, and I wanted to see where we were at and make sure we followed up on it.
Anything else for the good of the order?
It's actually a piece of information I'd be curious to know based upon Dr. Talbot's questioning tonight. Regrettably, I won't be here, as you all know, on January 7th to get this answer then, but I am curious to know why we did not replace the 7th, 8th grade music teacher. So if you could get back to me, let me know, I'd be curious.
That must have been before I got here.
Yeah.
Okay.
But yeah, I'd like to know
We'll track it down.
Yeah, track it down.
the rationale behind that.
Sure.
Thanks.
else? All right, hearing none, we stand adjourned until next, January.